Manuel Henriquez, Hercules Technology, has come down in the past 2 months. A lot of that is because of the pullback in tech and biotech. How does this affect the way you do business?
Well, the pullback is something we've been expecting. We've been talking about the pullback in technology valuations and biotech now for about 2 or 3 quarters. And it's actually a welcome relief for us because that means the valuations that we're investing in are much more realistic and offers better upside for our shareholders.
Well, what are you excited about in your portfolio right now?
Well, we've had a tremendous Q1. We've had 5 IPOs completed in Q1. Companies like Revance, for example, it makes a rub-on Botox to get rid of wrinkles. We've had other great success in our portfolio called Box.net. You know, cloud computing, something that has been getting a little bit of a brown eye or black eye lately, but I think it's a good stock.
What about the IPO window? You own warrants in companies, you have equity in companies. That's the beauty of a BDC. How narrow or wide is the IPO window right now after the pullback, after all those high-flying cloud IPOs came forward and a lot of them come down?
Well, certainly a lot of valuations, we see a FireEye, a Rocket Fuel, among others, have seen some significant pullback, 50%, 60% pullback in valuations. That still makes it good for us because we have a portfolio of 110 different positions in our portfolio that are pre-IPO companies. And we typically see anywhere between 8 to 15 IPOs a year in our portfolio. So we actually like what's going on in the market and we think we're well positioned.
And right now, a lot of people like your 8.9% yield because there's no yield out there. The 10 years at 2.5%. Any plans to raise it? I mean, you've paid it for a long time.
Certainly. In fact, we actually raised a dividend, I think it was 3 or 4 times last year in the last 12 months itself. Our dividend, as you know, as a BDC, business development company, we have to pay out 98% of our earnings in the form of dividends. So as our earnings are increasing, we expect the dividend to increase as well. So we think earnings will continue to grow throughout 2014.
Now, Hercules specializes in tech and life sciences. Recently, everything's about the cloud. What's the next big thing in venture finance?
Well, I'm probably going to step on a third rail here. I mean, network neutrality on the telecommunications marketplace, something that we've been pretty much open for. We think that allowing deregulation to actually happen on having throughput of data on a network is very important. So we think communication is going to be a huge area of investing in the next 12 to 14 months.
And then also, you clearly you take a company public. Do you hang on to the shares after they go public, or do you just kind of spit them right out? You
know, we typically have a 180-day lockup after the IPO, which means the investment bankers restrict us from selling it. But we typically sell right after that period of time. Once we make our required returns, we're actually getting rid of the stock.
Why is that?
Well, we're not a hedge fund. You know, we're not here to manage long money. We're a dividend and we're a yielding asset play. So, you know, once we make the capital appreciation that we expect to make, we're going to sell those shares for the benefit of our shareholders. Those shareholders should see commensurate higher dividends as those gains are realized, and that's what we do.
All right, thanks a lot, Manuel.
Thank you for your time.
And thank you for watching The Street.